All right, let's talk about what might just be the most anticipated, most hyped up market debut in history, the potential IPO of SpaceX. It is an absolutely wild story of incredible ambition, mind-boggling numbers, and, a bit of a gold rush for investors who are trying to get in on the ground floor.
So let's just start with the number that has everyone's head spinning. We're hearing analysts and insiders throw around a potential valuation of $1.5 trillion. To put that into perspective, that's more than the entire economy of a lot of countries. It's just an astronomical figure for a company that's still private.
The hype isn't just about the numbers. It's a feeling that's echoing all over Wall Street. Listen to Shay Ballor from Futurum Equities Research, who just comes right out and says it's going to be the craziest IPO ever. The demand is expected to be completely off the charts, from the biggest institutions all the way down to you and me.
But that's the real question, isn't it? When you cut through all the noise and all the hype, what's the actual investment case here? What are the real opportunities? And maybe more importantly, what are the hidden risks for anyone trying to buy in? Well, that's exactly what we're going to break down.
Okay, so let's get into it. To even begin to understand a valuation that massive, you have to look under the hood at SpaceX's business. It's not just one thing. I heard one portfolio manager describe it perfectly. The company has both the steak and the sizzle, and it's powered by two very different engines.
So on one side, you have the launch business. This is the foundation, right? The cash-generating workhorse that has a near monopoly on reusable rockets. It's the proven, reliable steak. And then, on the other side, you've got Starlink, the global satellite internet service. Now this is the Sizzle, an explosively growing subscription-based network with just massive long-term potential.
And check this out, because this is where the story gets really, really interesting. Look at how fast that Sizzle is becoming the main course. Starlink's revenue is just on an absolute tear. It's projected to jump from $6.6 billion in 2024 to nearly $12 billion in 2025. That means it's on track to make up something like 2/3 of SpaceX's entire revenue. This is the growth engine that has investors betting big.
So, when you see that kind of growth, it's really no surprise there's a pre-IPO gold rush going on. But here's the thing. You can't just go and buy SpaceX on the stock market. Not yet. So investors are having to get creative. Let's look at the 5 main ways people are trying to grab a piece of the action right now.
So here's the lay of the land. You've got these specialized pre-IPO platforms. Think of them like exclusive marketplaces for private company shares. Then there are venture funds that pool money to invest in a bunch of startups, including SpaceX. You've got secondary markets, which is where existing shareholders, like employees, can sell their shares. Then there are ETFs, which bundle SpaceX with other stocks. And finally, for a very, very select few, there's direct investment. Every single one of these paths has its own rules, costs, and of course, risks.
Okay, so if you want to own actual direct shares before an IPO, your options are pretty limited. Platforms like EquityZen and secondary markets like Forge Global, they'll give you access, but here's the catch, and it's a big one. You have to be an accredited investor. That means you have to meet some pretty high income or net worth requirements. And as you can see, the minimum investment is steep, often starting at 10 grand and shooting up to over $100,000 pretty fast.
So what about the rest of us? For retail investors, the path is an indirect one. You can invest in venture funds or ETFs that hold SpaceX as just one part of a bigger portfolio. The huge advantage here? Accessibility. The minimums can be as low as a few $100, and you don't need to be accredited. This makes it, by far, the most popular way for everyday investors to get some kind of exposure.
But, and this is a big but, while getting in early sounds incredibly exciting, it is not a golden ticket. We have got to talk about the hazards here, because in the world of pre-IPO investing, the risks are just as monumental as the potential rewards. It's a real reality check.
Okay, so first off, let's talk about the general risks of any pre-IPO investment. These things are highly speculative. You often have very limited financial info to go on. The shares are illiquid, which means you can't just sell them whenever you want. On top of that, companies like SpaceX can actually block you from transferring shares. And even if it does IPO, you're probably going to face a lockup period where you're not allowed to sell anyway.
And to really see how this plays out, let's look at a case study. The Destiny Tech100 fund, which trades as DXYZ, is one of those funds that gives retail investors exposure to SpaceX. But it perfectly, and I mean perfectly, illustrates this hidden danger of paying what's called a premium. Now, before we get into the crazy numbers, you got to understand this one key term, net asset value, or NAV.
So put simply, the NAV is what one share of a fund is actually worth, based on the real value of all the stuff it holds. Just think of it like the sticker price on a car. It's what it's supposed to cost.
And this, right here, shows you exactly what I'm talking about. As of early 2024, the market price for one share of DXYZ, what people were actually paying for it on the stock market, was $28.76. But its net asset value, that sticker price, what the share was fundamentally worth, was only $11.37. People were paying way more than the underlying assets were valued at.
So how much more are we talking about? A mind-blowing 152.95% premium. That's the financial equivalent of seeing a car with a sticker price of 11 grand and willingly paying over 28 grand for it just because it's the only way you can get access to it. It's a huge disconnect, and it's driven purely by hype and demand. And you don't have to be a Wall Street analyst to see this. Someone on Reddit just put it bluntly, noting that at its peak, you were overpaying by a factor of 4. It's just a stark reminder that just because you can buy into something doesn't always mean you should, at least not at any price. Understanding this premium is absolutely critical.
Okay, so you've got this incredible potential. You've got these really serious risks. What happens next? When could this historic IPO actually happen? Honestly, the timeline might be the biggest question of all.
The truth is, nobody knows for sure. I mean, you've got analysts betting on a decision in 2025. You've got inside sources whispering that an offering could come as early as June 2026. And then you have Elon Musk himself, who has kind of joked that a SpaceX IPO might not happen until we have a self-sustaining colony on Mars, which, could be decades from now. The timeline is completely up in the air.
And just to add another layer to all this, you have this promise from Elon Musk. He has said very publicly that he's a huge fan of small retail investors and will make sure they get top priority in any offering. It's a commitment that has, of course, fueled even more excitement among his massive following.
So, it all comes down to this one question, doesn't it? The hype is absolutely unprecedented, the valuation is astronomical, and the risks, they're monumental. For investors, is the SpaceX IPO a rocket ship destined for the moon, offering once-in-a-generation returns, or is it a financial black hole, where the immense gravity of all this expectation could just pull unprepared investors in? That right there is the trillion-dollar question everyone is waiting to see answered.